Welcome to The Real Money Show, the number 18778 Silver, the website guildhallwealth.com. Thank you for taking a few minutes to join us here, and welcome to the show, Jerry Correia.
Thank you.
My name is Jeremy Wiseman, the number 18778 Silver, and the website guildhallwealth.com. Jerry, as usual, there is a lot to cover. I want to go straight to the good stuff. Michael Oliver, he is an analyst in the market. He does a lot of things regarding momentum in the market. He has been a great analyst in this market for many, many years. He was on Jesse Day's Commodity Culture, and man, he had some good things to say about gold and silver. I want to share them with you.
Please share the good news.
So let's start with his basic overview of the markets. Is that near term, silver is targeting $60 to $70 by the end of 2025. Long-term potential is much, much higher. He shares with the audience that gold is pausing for the moment, which I think is a good sign, by the way. It's letting the 200-day moving average catch up. It's below the 50-day moving average.
We've been consolidating since April.
Yeah, it's not a bad thing because you want to let the 200-day catch up to that. He says it's on a pause, set for renewed upside, driven by systematic fiat weakness and market instability. Mm-hmm. We've got some other drivers for the market, which we're going to get to later. He says the main driver for both metals is ongoing degradation of fiat money and not just geopolitical events. So there's a bigger picture of fiat money. Keep that in mind because we're going to get into some action from the administration in the United States and what they basically connecting all the dots and what they're saying about the gold market.
Interesting.
Okay, I wanted to put that together for our audience this week. So again, he expects silver, which is now has reached 14-year highs, trading above $38 an ounce. He expects strong performance for the rest of the year, surpassing $50, which is a nominal high, and then he believes it'll move. Longer term, he's looking for $200. Mm-hmm. That would be something for people who already own precious metals. For gold, he is looking at it expected to break out, and he thinks that the upside momentum is going to continue. He does not believe it's just a war hedge, as an example. He believes that the main driver is going to be the fiat currencies and the issues surrounding that. So let me get your feedback, your comments, your reaction to Michael Oliver's takes in the market.
Trusted source for analysis. His work on momentum is one of a kind out there. So you got to follow his work, and this piece specifically puts it all together, especially where we are right now. We have been consolidating for quite a long time, since April, moving in a sideways pattern. But in any market, the longer the consolidation period, the higher the peak. So we are anticipating a breakout any moment now. It could be one of many fundamental drivers. We've been consolidating most recently because of the Ukraine and Russia deals, and then you have the Jackson Hole Symposium, very short term. But I think when the major topic would be having to look at the Federal Reserve, the interest rate cuts, and when that happens, it could be in September. Some are saying that we will see cuts in September. Some are opting for 100 basis point cuts. So this is not just a cut; that would be a slash, and that would be the driver. That would be the spark to launch gold and silver off into new highs. And the analysis shows that the last 4 or 5 interest rate cut cycles in the U.S. over the past 20 years shows that silver does go up 420%. That would put silver at $200. So Michael Oliver's suggestion and his analysis pointing to 200 is not some number that he's choosing out of the air.
Yeah, he's been analyzing this market for years, and he's been bang on about a lot of stuff in this market over that period of time. The number 18778 Silver, the website guildhallwealth.com. If you agree with him that the market could break out above $40 and get quick momentum moving past the $50 range, then you'd want to get into this market pretty quick and establish a position. And I have to say, from a consolidating standpoint, it definitely just feels different, Jerry. It doesn't feel like you're on Tinder hooks the way we have in the past when the market consolidates. There's often been an anxiety about that, like, oh, the further we go sideways, the more chance it could just collapse. But there's just so much more fundamentals at play in this market that just give us this sense of security when it comes to, yeah, markets can take a pause. That's okay. Right? Gives people a chance to get into the market. I mean, I would like to make those type of gains. You're basically looking at the market potentially doubling in value.
Yeah.
Right? Or getting pretty close.
It's four to 5 times.
So, and that would just be an amazing breakout for this year. And then moving beyond that would just be, it would be an icing on the cake for so many people who are already in the market. Why wouldn't you take advantage of that? Then you add to that, Jerry, industrial demand, deficits in the market. You have increasing industries that include silver and new modern things that could be created, new technologies. And what is that all going to include?
I want to get into that in a little bit. We're going to talk about the Kobasi report's shocking statistic and what that means for silver. But before then, if you're interested in getting started, give us a call. We are your professionals in physical precious metals, gold and silver bullion, RSPs. Own it directly, take it home, own it in a private depository. We do it all safely, entirely outside of a fiat digital system. Give us a call, 1-877-8-SILVER, and the website, guildhallwealth.com.
And Jerry, that's exactly what central banks are doing.
Aren't they?
They're not buying.
They're showing us the plan. They're showing us the solution.
Yeah, they're not buying ETFs. They're taking delivery of physical precious metals.
The ETF is something that is often offered by financial planners, consultants. If you want to get exposure, if you're not interested in really owning the actual asset, but we stress ownership. We know the world that they're trying to push. You don't want to own anything. You will own nothing and be happy. Well, we have a report coming from EFTstream.com, which is one of the largest commodity ETFs of gold and silver. This is Tabular Investment Management, and this is out in Ireland. It's called BARS. Now, they are an investment management firm in the Cayman-based entity, and what they saw was an outflow, pretty much emptying the entire vault holding the ETF. I call it ETC. It was emptied by huge redemptions, and it wasn't just a one-off. It was actually a multiple large investors that came in and bought up all the gold and took delivery of the gold.
You mean they ran an ETF and someone came in and took delivery
there
of all?
There were large redemptions, shedding about 99% of the assets that are backing the ETFs. And if you just look at this chart from beginning of July to July 21st, the share just went to pretty much zero.
It looks like, I'm just looking at it, it looks like a massive hill, and then it goes into a plateau, and then it's just a massive cliff.
Yes, after peaking just shy of $1.4 billion in assets under management in April, the fund has been rocked by large redemptions, shedding about 99.5% of the assets since July 30th.
So they would know who the redemptions are. Are they willing to share?
The article doesn't get into who, but as to whether they were attributable to a single client, they're not really commenting. Obviously, they're declining to comment, but it's the beginning of the woes of not just this firm, but I think the entire ETF market is going to feel the same type of pent-up demand. You have people that are uncertain about the backing of these ETFs. There is a growing awareness of the fact that several issuers of financial products invest in gold ETFs, gold certificates. They don't have the amount of gold they actually claim to own. There are over 100 times more paper gold sold via certificates, ETFs than there is actual physical gold sitting in the vaults.
Well, I think it also just speaks to the fact that these ETFs can be rated.
Yes.
Right? Whereas if you
have deep pockets.
If you become your own central bank and you acquire the gold yourself, you're not worried about that, right? You don't have to worry about being part of that system. And I don't know the effects of rating physical metals from an ETF, what that does to the ETF price, how it, the structure of it. But I personally would want to avoid that completely. I could see maybe a purpose for ETFs if you want to trade the market and you don't want to deal with the costs of actually owning it. But if you want to protect yourself and you want to protect your wealth and you want to be a participant in the physical gold and silver market, I think you want to have it as a reserve asset the way central banks have it.
That's correct.
And so if that sounds right to you, then you're going to want to invest in it, or rather own it in a registered account the way Guildhall provides.
The warning bells are ringing. The canary in the coal mine is already dead. Do not own paper. You have to own the physical gold and silver in your own name. Don't expose yourself to these counterparty risks or an counterparty default. Gold and silver cannot default. You want to have default insurance, and that is with Guildhall Wealth's gold and silver RSPs. Do it the right way, or just don't do it at all.
And we'll show you how to do that. The number 18778-SILVER, the website guildhallwealth.com. The administration in the U.S. is basically signaling that they want a lower dollar and that gold should become a reserve asset. We're going to talk about that in the next segment. Again, get in touch with us. We'll show you how to get involved in the physical gold and silver market. You can become your own central bank with Guildhall. That is your route to owning physical gold and silver. And that is the best way to take advantage of this market. Avoid counterparty risk. Don't do investments. Don't have exposure to other entities. You want ownership. That's the difference. Jerry, people will say, why should I go with you? Or what's the difference? Da, da, da. Or maybe it's a price thing. They say, this is a lot of costs involved. Da, da, da. This is ownership. This is ownership. You don't buy a house on paper. You buy the actual property. Right? And that comes at a cost. You pay the broker, you pay the land transfer, you pay the lawyer, and you're done. You don't think about it because over time the value of that asset is going higher. Right? Correct. And there's going to be bumps in the road. Someone put a comment, Jerry, on our YouTube last week. They said, in all caps,
"Whoa,
down day for silver."
Dun, dun, dun.
Dun, dun, dun. Yeah. I just responded with, first thing that came to my head was Roger Federer's convocation speech he made to graduates. And he said, listen, I've won 80% of my matches. It was like 8,000 matches or something. It's crazy. I don't know how many thousands of matches. I've won 80% of my matches, he says, 54% of the points. Let's not talk about the days, right? Let's look at the months and the years. And let's focus on winning, right? Silver's up like 20+% this year. Like, what are we worried about one day down?
You're up 32% on the year. Gold's up 29% of the year. The U.S. dollar index since the beginning of 2025 is down a whopping 9%. It's moving in the wrong direction. And Federal Reserve, what are they going to do?
Well, look, I kind of put interest rates in the same thing as the day.
Yeah.
When you think about interest up, interest rates down in the long term, you could put a chart on top of each other, overlay them, and you'll see interest rates rising and falling and rising and falling like the sun rises and sets and the moon rises and sets. And at the end of the day, gold and silver have kept on rising.
Yeah.
Over the long term. So
throughout the seasons.
So yeah, we're in the season of gold. How do we know we're in the season of gold, Jerry?
I think it's a golden age. Golden age.
I've got some info right here.
All right.
I was thinking about this. I was listening to an interview with Luke Groman. We've talked about him a little bit on the show. He's the founder and president of Forest for the Trees. He kind of broke onto the scene earlier this year because he did a stunning interview with Tucker Carlson, and now everybody kind of wants him on their show because he's just got a great thesis of what's going on. So he was interviewed on Miles Franklin Media with Michelle McCory. And before we get into his thesis, I want to just kind of connect some dots. Let's just review the current administration in the United States and all of the ways they've talked about gold this year. Okay? Starting with Trump put out a tweet or a truth saying he who has the gold makes the rules.
Right.
Just out of the blue.
That triggered a few folk.
It could have been triggering for some. Another one, when Elon Musk was part of MAGA, they, and it was on the airplane, Trump came out and said, yeah, we're gonna audit Fort Knox. We're gonna go and see if the gold is there. They're talking about gold here, right? J.D. Vance has talked about a weaker dollar. Treasury Secretary Scott Bessent, regardless of his, whatever he put forth and kind of walked back, and it's kind of hard to see where he's standing these days, per se. At the end of the day, he is a self-professed gold bug, and he's talked about gold being a way to store value. There was the recent gold tariff talk, right? And no one really knows the full story, but what we do know is Trump came out with the truth and said, gold will not be tariffed. Again, another mention to gold. The partner to that, the tango partner to gold, and all of these mentions to gold, Jerry, to me, is that the administration has signaled over and over again that they want a weaker dollar. That they want a weaker dollar. And Luke Gromen's thesis becomes so obvious once you just plot those dots together of the amount of times this administration has mentioned gold, or it's become part of the news, it linked to this administration. Mm-hmm. Okay? So his thesis is that the US dollar is in Triffin's dilemma, which is they are the world's reserve currency, so they have to keep printing money to keep up. Everyone's got to hold the reserve, so you have to keep printing the money. It hollows out the manufacturing. So he kind of, what would you say? He kind of bleaches it a little bit to make it, it's not about corruption, it's just a dilemma, right? Which is fine. But that the U.S. is basically saying, look, we have these debts. The clock is ticking. It's past midnight. We have to deal with it right away. And so we don't want the U.S. dollar being a reserve asset anymore. It's not about having reserve FX in every country's accounts. Mm-hmm. Whether or not, it doesn't matter who started it. It doesn't matter who precipitated it. Whether it was China decides we don't want to own treasuries, we'd rather hold gold because those treasuries aren't paying out against inflation, right? Enter Judy Shelton, her response. But it's more like, the U.S. is saying, we don't want it either because we don't want the responsibility. Because if we're gonna reshore manufacturing and take care of this debt to some way that it's manageable, we need a lower dollar, and we need to not have it be a reserve FX in anymore. But we can have a reserve asset in gold, and the U.S. is sitting there saying, and we have plenty of that. In fact, we might even monetize it.
That's right.
Apparently. Also, apparently, I sent you this thing from
South America?
From Bolivia actually did it. And we talked a couple weeks ago with the Federal Reserve writing a paper saying here are the banks that have done it.
Yeah, that was on August 1st. So that coincides with what you're talking about here.
So the bottom line here is Luke Gromen believes in plotting connecting the dots that gold is destined to become a neutral anchor for global reserves. Pick your currency. It doesn't matter. It's about reserving the asset and reserving the value, and gold is going to do that. He believes gold's becoming the anchor. He believes that's why the U.S. wants a lower dollar, because they're going to have gold as an anchor. This falls in line with what Rick Rule says. He says, look, I went through the 70s. The only way to get rid of this debt is devalue that dollar, baby, get inflation going. But at the end of the day, on the other side of the transaction, if gold is rising in value, that could mean lots of prosperity for everyone, right? So the idea is get that reserve asset, let the market revalue it to 10, 15, possibly higher, $1,000 an ounce, and you now all of a sudden can monetize debt. Everyone trusts each other with global trade. Pick your currency. You've protected against inflation. I'm done.
That's it.
The number 18778 silver. The website, guildhallwealth.com. Take advantage of the golden age and get some physical gold and silver in your portfolio. You can do that direct in a registered account. You can just buy it direct, take it home, store it yourself, be completely private. Or you can even utilize a storage facility. We use Brinks, which allows for access to liquidity. You want to be able to sell on a phone call. And if you have a large enough amount, maybe it becomes detrimental to just keep it all stored, buried in the backyard, which is great. Cool. That sounds fantastic. But you also want to be able to sell on a phone call, or, I'll give you the perfect example, Jerry. When I bought our place a few years ago, my agent just goes, "Great, so you have the money for the down payment?" And I did, but I had to think about it.
I thought I did.
I was like, wait, you're asking me for a lot of money all of a sudden, right? So that's the idea, is it's access to value. Same thing central banks are doing. That's what the reserve asset is for. So the number 18778 silver, the website, guildhallwealth.com.
You know what, this is very much in line with an article that was brought out, the Business Insider. It was a post and a report that was done by Goldman Sachs. And the article goes, gold is more like Manhattan real estate than oil, according to Goldman Sachs. That's because, unlike oil or gas, gold is not consumed. It's accumulated. Buyers have been flocking to the precious metals in years. Put in this context, about 2,200 metric tons ever mined still exist, mostly though locked in vaults, central bank reserves. And new annual production adds just over 1% to the existing stock. You can't pump gold, they say, but you can bid it out of someone else's hands. Gold doesn't get used. It changes hands and gets repriced, wrote Goldman Sachs analyst. The gold price reflects who is more willing to hold it and who's willing to let go. And they segmented the market into two groups. We have conviction buyers. And which one are you here? I believe I began with a conviction buyer, such as central banks, they say, ETFs, speculators who buy regardless of price, who needs insurance policies. And then you have opportunistic buyers, households in emerging markets like India and China buying on the dip. We see that all the time. The second group provides a floor under the gold prices during sell-offs. And that's where the Manhattan real estate analogy comes in. It's really cool, Jeremy. So the total number of apartments is largely fixed, just like the gold. And the small amount of new construction each year is not what drives the prices. What matters is the identity of the marginal buyer. In Manhattan, there are two groups of buyers. Conviction, those with deep pockets who will live there at any cost. And opportunistic buyers who will buy only at the right price and are otherwise content to live in New Jersey or Brooklyn, they wrote. In both markets, gold and Manhattan real estate, prices shift not because of new supply, but because who takes the keys. And the key takeaway for Guildhall is he who has the gold makes the rules. Yes, at times, Jeremy, I'm guilty of being an opportunistic buyer. I will buy on the dips. But the foundation of my hard asset portfolio is a conviction of knowing where the dollar goes. It's a conviction of knowing where the trends are leading towards weakening currencies. The conviction knowing that in Canada, we do not have a sound leadership. No deals, no gold. We have reserves of treasury paper in the vaults, and they're going to protect Canadian savers. No, they will not. You need to do it yourself. You need to become your own central bank. And you need to give us a call and we can help you do that.
The number, 18778 silver, the website, guildhallwealth.com. I wonder if the article or whoever wrote it was thinking, yeah, you make money on the buy, not the sell. That's exactly a real estate thing. Or it's time in the market. not timing the market. They didn't mention those two, but they apply to the metals market as well. The number again, 18778 silver, the website guildhallwealth.com, and that is to hold physical gold and silver in a registered account like your RSP, your TFSA, your Lira, LIF, RIF. It's fully allocated, segregated. It is unencumbered. That means there is no counterparty risk. If Guildhall were to disappear tomorrow, the product still exists in the vault. It's yours. It's under your name. It's in the sub-account under your name, held outside the banking system, but still within your registered account. So you're not prey to things that can happen in the equity markets because you actually own the physical product. We'll show you how to do it. We're very service oriented. We love helping clients open their accounts. We love helping clients to do their transfers from existing institutions and walking you through the acquisition process. We have a lot more to come on The Real Money Show, as if we didn't already bring you enough. The number 18778 silver and the website guildhallwealth.com. A lot of new listeners to our show, Jerry, might not be aware that Guildhall also deals in rare natural fancy colored diamonds. And what we have done over the years is curate a collection of the rarest natural fancy colored diamonds that we can get our hands on. We focus on internally flawless yellow diamonds over 1 carat. We've focused on VS quality pink diamonds, as many Argyle pinks that we can get our hands on, but of high clarity. Of course, color is always paramount to any decision. It's got to look great. The color has to be strong. And when we do that and bring it together, what we end up with are assets that are impossibly rare. And the market's done very well over the last 20 years. Why do people want to own a natural fancy colored diamond? Well, one, it is portable wealth. You can hold millions of dollars in the palm of your hand. It is always a surprise when I do it myself sometimes. You go, wow, that is
overwhelming.
That's a house.
Yes.
And you could literally put it in your pocket and fly anywhere around the world, and you've just taken with you millions of dollars of diamonds. Another reason why people decide to own natural fancy colored diamonds is security, because it's outside of the reach of government institutions. You know, we've had countless discussions over confiscation of wealth. You know, if you can't see it, it's hard to confiscate it. And it is a very private transaction. I mean, if you're buying a property, as an example, and this being wealth in your pocket, you know how much you have to sign over, how many times you sign to show that you've purchased this asset.
Witnesses, lawyers.
This is much more secure because it is private. The other aspect of this is just understanding the rarity of it and just how hard it is to find diamonds that we offer at Guildhall. I'm going to talk about one that we have specifically, and I've been trying to find something similar, and it's absolutely impossible. I think that's a sign of the times that nobody wants to sell these assets right now. And then there's the legacy side of it. It is a perfect asset to pass down through generations, carries emotional weight, but it shouldn't just carry emotional weight. It should carry financial weight. And so colored diamond owners understand that. They want to pass these assets down. And I was listening to, I found this post. Sylvester Stallone sold this very rare Patek Philippe watch that he put into auction. Although it's strange he put it into auction, but I guess someone said, look, it's time, you could do really well on this. And in the interview, he was talking about, you know, someone saw him wearing a really nice watch, and they were basically saying, look, like, I've got a Timex, it does the same thing, yada, yada. Mm-hmm. And, you know, his response was, it's not about keeping time. It's about keeping in step with where you are in life. It's about the understanding that you've achieved a lot and you deserve something.
Right.
And that's the other side of this, is that a natural fancy colored diamond is something that you can wear. You can enjoy the beauty while you have this lifelong asset that continues to protect your wealth and grow over time simply because it's rare.
And reflecting your legacy, the family's legacy of passing down generational wealth. What a way to reflect that legacy.
So it's a great asset to have. Should we talk about the diamond that we have, or do you want to talk about this real life crime caper?
Oh my goodness! So
regarding colored diamonds.
Yeah, I'm going to ask you about that diamond. But before we get into the stone from Guildhall's collection, the Dubai police, Jeremy, they foiled an elaborate heist last week, trying to steal. Well, they did steal a 21.25 carat pink diamond worth 25 million with a, get this, a 0.01% global rarity rate. So, this is from the Fancy Color Research Foundation. They have a rarity report. You can get if you own a rare diamond through Guildhall, you will get a rarity report. The thieves spent over a year plotting, what was the name of their operation? Operation Pink Diamond.
Okay. Original.
Yes. Not very incognito. Complete with luxury cars. So they were posing as intermediaries for a wealthy buyer. So they had luxury cars, 5-star hotels, even a hired gem expert to make the scam look real. They got caught within 8 hours. Police recovered the stone hidden in a refrigerator before it could be smuggled out of the UAE.
I think they meant to say freezer because it's ice. Right?
Right, the freezer. The real story here for me, for Guildhall, is the rarity of the gem. Large natural pink diamonds like this are among the scarcest assets in the world. Most pink diamonds are under a carat. So at over 21 carats, this stone is practically a once in a lifetime. And the fact that so much planning went into trying to steal this gem, Jeremy, shows just how extraordinary it is. They planned it out for 1 year, calling it Operation Pink Diamond. They went the full 9 yards. Natural pink diamonds of this size are truly one of a kind. You can't find them anywhere. So rare that they inspire elaborate schemes just to get close to them. So, Jeremy, this pink diamond case, this pink diamond story really drives home just how rare these diamonds are, these assets, these legacy pieces are. 21 carat is basically museum level. Now, we may not have that in our collection, but at Guildhall, we do have some remarkable rarities over the years. You've had opportunity. Can you give us an example?
We'll talk about museum quality. The ROM has a couple of colored diamonds, and we have some diamonds that are better than what they have at the ROM. We've got a diamond. It's an emerald cut, internally flawless, intense yellow. And the amount of times you would see it in the market is you might get between 3 and 10 a year, if that's possible. But it's not to say that it's necessarily going to have the beautiful shape that this one has. Mm-hmm. It could be an emerald cut, but it might be a long rectangle. It might be shallow. It might be deep. There's a lot that can go into that 3 to 10 number. But the one that we have is absolutely perfect.
Breathtaking.
This has to be put into a piece and shown off at weddings. And the funny thing is most people wouldn't know what it is, but this thing is just going to keep going up in value. It's certainly not going to drop in value because you can't find them. It is absolutely impossible to find. 71.4% of fancy colored diamonds are yellow. 20% will fall into this category of between 1 and 1.5 carats, but 4% of yellow diamonds are emerald cuts.
Wow.
So you're already into the 1/10 of 1% of all colored diamonds. And 8% of all yellow diamonds will be internally flawless.
Amazing. Really cornering that rarity side of the market.
Absolutely. And even if you've tried to find a white emerald cut, they're difficult. Mm-hmm. So to have it as a colored diamond, and the beauty of it as well is that you could acquire something like that and you're still paying less than retail for a white.
Exactly.
Which is ridiculous.
Put it that way.
It just kind of shows that the market doesn't even understand sometimes. No. But you look at the pink diamonds, you look at auctions, and you understand that those in the know.
Yeah. And
right?
You know what?
It's still the best kept secret.
With the destruction of the fake color, the fake diamond market, the artisan diamond market, that has imploded. That has caused people to do more research, to ask for the GIA reports, the rarity reports. Even with the advent of AI, I tried to do a search for a few stones that we have in the inventory. Help me, AI, find this stone somewhere. Couldn't find it. This just is a further testament to show, with technology, we have actually sharpened and refined the natural fancy color diamond market, and that's why I love them. They offer a rare, low correlation asset for your portfolio that will appreciate with your legacy, as it does as well. We've been doing this since 2002. They've been a trusted safe haven investment opportunity for everyone. You want to get in touch, you want to request the guide, contact us to book your own diamond discovery session today. Guildhall will show you how you can own a legacy diamond for your own legacy.
The number 1-8778-SILVER, or go to the website guildhallwealth.com and contact us. Get into a discovery session and take a look at one or two of these beautiful, natural, and very rare fancy colored diamonds. There's Jerry. At the top of the show, we mentioned Michael Oliver on Jesse Day's Commodity Culture. Great video. He talks about silver being at 14-year highs. He truly believes, based on his analysis and the techniques that he uses in the markets, he believes it's going to take out $40 an ounce. He believes that the price of silver could surpass $50 an ounce, the all-time high, to get into the range of $60 to $70. That is quite the momentum. And if you look at what's behind that, what could be pushing that? Not just investment demand, but demand from supply side and industrial use. Talk to us about that and how that could play into some of these numbers that Michael Oliver's talking about.
Yeah, when you look at the buyers who are coming, we talked about this at length last time. The retail buyer is such a small market of who is really driving this market. The market is being driven by central banks, countries looking to shore up their reserves, to put it on balance sheets, because gold is collateral. It's number one collateral. So you want to have it in your portfolio. And when you look at all of the different fundamentals, what's driving markets, industrial use is very high. We not only have the remonetization of metals and revaluation, the scarcity-driven growth. It's the potential for that investment potential because of the scarcity. You have the industrial and monetary convergence, but the silver is where everything culminates. You have monetary and industrial attributes combined with an asset that is a reserve asset, according to Russia. Now, this brings me focused on the Kobasi letter. The Kobasi letter, highly recommend. You want to follow these guys. They came out this week with the shocking stat of the day, and this is in line with industrial demand. We know that industries usually drive the demand, and as a result, we're seeing year over year of structural deficits coming out of the ground of silver mines, about 5 years straight negative results. Shocking stat of the day, Kobasi letter. Data center energy consumption has reached a record 5% of total U.S. power demand. This increase has been driven by the rapid adoption of digitalization and AI technologies. Now, that has to be our key takeaway. AI is driving a data center explosion. It's happening all across North America. You can't avoid it. You have AI everywhere, from WhatsApp to Grok to everywhere to ChatGPT. Data centers could triple. These are the key takeaways. Could triple the U.S. electricity use by 2030. That's a jump from 1.2% to 4.1% of global power demand. Silver isn't in every cable, but it's the premium layer where reliability and spread matters most. Silver is in AI. Silver is in this data center surge.
So it's not just the data centers carrying the information, but also the components that bring the energy to it.
Yeah, it's found in switches, relays, critical connectors, and even micro interconnects on chips. How much? Well, if just 10 milligrams of silver per server were added for high-speed connectors or coatings, and there are tens of millions of servers deployed. You're looking at hundreds to thousands of kilograms of silver just in a new data center gear. Even just small amounts of silver per device multiplied across a digital economy become a real demand story. Goodbye silver, silver unobtainium, prices through the roof. Investors watching tight industrial supply, you may want to highlight and spotlight this trend. If no one has brought this up to you yet, we are here.
Yeah, you're not going to keep this thing below $50 in perpetuity. It's just in too much demand. It's just part of the new future, the digital economy, which is coming. Something's got to run it, and silver's going to be a key component. So when you put it all together, silver industrially, monetarily, reserve asset for gold, the world is changing rapidly, and owning the actual physical commodity is the best way to get involved. The number 1-877-8-SILVER and the website guildhallwealth.com. We will show you how to do it. We'll show you how to hold physical gold and silver outside the banking system in your registered account, which is always an amazing thing. You can go to the vault and personally audit your holdings. Go try to do that with a pool account. Or you can buy it direct. If you've never purchased, buy direct, get some in your hand, or use it or acquire some and put it into a vault for ease of liquidity. Make sure that you own it. Make sure that you get the serial numbers. Make sure you have access to that product. Make sure you have access to be able to buy and sell. And that's what we do at Guildhall. We hope you enjoyed this information. If you've missed a show, please follow us on YouTube or check us out on Rumble. Follow us on X. Love to have you be part of the conversation and let us know what you're thinking about. Jerry, thank you so much. And thanks to all of our listeners for joining us this week on The Real Money Show. Can't wait to speak to you next week.